Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back, guys. Let's have a look at the chart and the new candle closes. First of all, quick look at the higher time frame chart and a short recap of what we have here. We had the quarterly close, and I had marked out 4 scenarios that I would have liked to see because they would have made the picture easier to work with. In the end, a few things happened and a few things did not. What happened? Price pushed into the level and then rejected from there. What did not happen? We did not close as an SFP, and to be honest, the close itself was pretty ugly. I would not call that a bullish close. On a lower time frame, if we see a bigger wick down and then a close like this, it usually means at least one more low. But this is a quarterly candle, so we need to see what comes next and not overreact to one candle. The new quarterly candle opened and already took out the low of the previous quarterly candle. It is only a small move below for now, so we need to see how this develops. The current rise could simply be the high of the new candle before price makes another move lower. One thing to keep in mind, toward the end of the cycle, quarterly candles can get smaller. So it is also possible that price simply ranges around here with wicks on both sides and prints a smaller candle. But for that, I need more information first. This update is more about the invalidation of the current ideas and what we can say from the first candle reaction. For now, only a few things from the first scenario happened: the rise into the level and the rejection. The other part did not confirm. So now I wait for more information from this new quarterly candle. Cycle-wise, we are in the higher time frame time window where we are looking for a bottom to form. Since time does not give us the exact price level, I use the historical levels where Bitcoin usually found its cycle bottoms. Usually, Bitcoin had a euphoric top first, then enough room to the downside, and the bottom levels were reached with around 80% drawdown. This time, we did not have that euphoric top. I mentioned that many times and also showed it with my score. Price did not deviate far enough above the long-term levels, and now the drop into this area is only around 54%. So that is clearly different this time. If price forms the bottom here, then it would be a much quieter bottom than usual, more like a 54-60% drawdown instead of the classic 80-cent plus drawdown. For the bottom area, I have a few tools here and more that I will check later when I update the bottom stats. But as you can see, these levels were respected very well in the past. First, we have the production cost, which was already hit. Yes, in the past we had some deviations below it, like wicks lower or some closes below, but price usually did not move far away from it. Then we have the power law chart, where Bitcoin also found its bottom every time. You can check the website yourself and see it. So that is already 2 major levels that have been hit. At the same time, price is hitting the previous bull market SR level. The only level I have lower is this breaker SR level, which is a bit lower and aligns with the last metric level I have, the CVDD coin value days destroyed level. That one is currently around 48.2K, and we had it on the chart for some time already together with the other levels. Best case, all these levels align together, like for example an 80% drawdown and this bottom metric level. But this time, that is not the case. That means it is different and we will see something new. Either it becomes a quieter bottom and the people waiting for the classic 80% drawdown are wrong this time, or price drops toward the 80% drawdown, and the people following these long-term bottom metrics will be wrong for the first time. Of course, wicks are allowed. But if I look at an 80% move from here, that would clearly not just be a wick anymore. So my conclusion is still the same. I still think this area is the bottom area unless these levels break. If they break, then I guess I need to search for new tools. Just kidding. The tools will still work, but we would need to see how much weight they still get if they fail for the first time. For now, I trust the data points. So if we combine both ideas, the quarterly candle looks unfinished and a wick lower is possible. At the same time, we are already inside the historical bottom area. That means, yes, I think it is clearly possible to wick into the lower levels. Of course, it all depends on the local lower time frame structure as well. Price can also just range from here and does not have to wick that deep into the area. And remember, some of these levels are rising. So in a few months, that lower metric level could already be around 50K or higher. As you can see, this level usually gets hit in the last period of the cycle. In the first example, it was a faster move down, and then price spent around 9 months near the lows. In the next cycle, price hit the level to form the exact bottom, and from there it ranged and moved up. In the last cycle, same thing. Price hit this level right into the cycle end period. Last time it was very clean because all the levels aligned in one place. This time, the levels are a bit more split, so it is more of an area. Price can hit them earlier, like in the first example, and then maybe hit them again later. Or price can move sideways and reach the rising level closer to the end of the cycle. The cycle time window is not fixed. Just because something happened 2 times before does not mean it has to happen exactly the same way again. We had around 47 months from low to low before, which would point toward October. My own cycle score has a deviation before and after that date, but for now, we use this window. That means overall, time-wise, we are already there or almost there. Price-wise, we are also already there or almost there. Only one lower level has not been hit yet, and that can happen now or later. I would prefer later, but I am prepared for the case where price wicks lower toward the SR level and the last metric level I have. That is basically it for this chart. It is not hard to see and understand where we are and what is different compared to previous cycles. You can all see what I see on the chart. I trade this step by step and keep looking for longs while also buying spot, as you know. That is the plan I keep following. Next one. Here we have a fractal I found from NASDAQ. This was from the last bear market. I just placed it on the BTC chart, and I have to say it followed it very nicely. And no, I don't expect fractals to play out perfectly. Especially toward the end of a fractal, people usually get surprised because price starts doing something different. But it gives us an idea for this level. If this level holds, then we could see something like this play out. That would also mean more ranging here, which would match the idea where the quarterly candle simply gets smaller. That would mean, yes, maybe we get a wick lower if it has not already happened, and then we need to see price range here. That would be nice confluence for a bottom to form. Right now, this is basically a decision area. If price starts losing this range, then logically, it goes for the next lower levels. But as long as that does not happen, yes, it can look scary and price can wick lower. But as long as the range holds, it can still form the range. So that is something to observe now. The fractal idea remains this one, unless price makes the move lower and is not able to come back inside the level. Next is the yearly fib time price chart. Price is currently grinding down along the time price trend lines and is now hitting this circle here. At the same time, price is getting closer to the next yearly fib time, which will be in the next few days. Around this timing window, I would like to see price start reacting from the level. That could first be a move higher and then more ranging, or it could turn into a bigger reversal if price starts breaking the resistance levels from here, similar to what we saw on the previous yearly fib times. But as always, time alone does not give us the trade. We need price to hit a level inside the timing window. Then we make the plan and execute from there. With that said, the next cycle timing window is in a few days. If the range holds and price keeps chopping, then I would look for the range to continue toward the next yearly fib time. Around that area, we also have the daily cycle, followed by the next yearly fib time. That would be around September, and after that, the next bigger timing area would be October. Those are the main time areas I'm watching for now. I will put the monthly stats levels on the chart now. The extended version, including the full stats and the process behind them, is on Patreon. If you want to understand how I trade, this is where I share the full picture. The levels, the stats, the setups, the trade ideas, the invalidations, and the trades I actually take. This is not just random TA after the move already happened. I show the process before the action, during the trade, and while managing it. You also get access to multiple strategies, the trading journal, Monte Carlo testing, cycle work, and the tools I use to build my plans. The goal is simple. You should not just copy trades. You should understand why the trade exists, what confirms it, what invalidates it, and how to manage it. If that is what you are looking for, the Patreon waiting list is open now. The more people join the waiting list, the cheaper it gets for everyone. Once I close access again, I will not keep opening it every week. So if you want to learn the full process and trade with a clear plan, fill out the waiting list. So now back to the stats are now ready. We can see that July closed positive 68% of the time, which is not bad. On the positive months, we have an average gain of around 16% and an average loss of around 8%. For the bullish wick, we have around 11% average and 5% median. We can see that it varies a lot here, from really big wicks to very small ones. So we need to take both levels and then see where the confluence is. For the bearish wick, we have around 8% average and 4% median. The dates for the lows are usually around the first 2 weeks, with the average low around day 10. However, same thing here. Some months printed the low very early in the first few days. That can be confluence with our lunar timing and yearly fib time, so remember that. For the highs, most of them came later in the month. Yes, there was one month that made the high on the first day and another one around day 3. But other than that, most highs came more or less in the last weeks of the month. So now let's look at the candles and what a bullish or bearish month could look like. Of course, this is not a guarantee. This is just the monthly average range. Both scenarios are fully possible. If the month closes differently, then we add it to the stats and adjust them. Simple as that. First, we look at the bullish month. A bullish July has a wick of around 11% average and 5% median. That would mean a wick lower toward the 55K, 51K area, followed by a move higher. As said, a few wicks were really small, so there is no guarantee that price has to reach this area. But if it does, then that is the confluence I want to see. To the upside, the average gain is around 16%, which would bring BTC back toward the 68K, 69K area. Now for the bearish month. This is still possible as well. That would mean we first get a rise into the wick area, around 61K to 63K, then a rejection and a move lower. The bearish close would be around the 54K area, more or less the same area where the bullish wick would be. So if price comes down into that area, I will look for trades and setups. All of this is, of course, based on the averages. But it still gives us an idea of what the monthly move could look like. It can also just become a small range month where price chops around here before the next bigger move. For now, these are the stats and the dates. Now let's see if we can find some confluences. These are the levels from the previous range. Clearly, we are already deeper inside the range now. So these are the levels that would align with the monthly averages. Lower, we would have the big SR level together with the last higher time frame level we had on the chart. But as it stands now, for this month, I cannot aim for that unless we get a surprise move. For me, I go with the data. That means if price comes down, I will look for the next trades. But as always, step by step, and for that, we zoom into the range. Here is the bigger range. So far, price is deviating below it. For now, this range is not fully lost, but to confirm that, we need to see price move back inside. If that happens, then I am aiming higher, at least toward the monthly bearish wick area based on the averages. My other strategy targets are higher, but first we need to watch if the month turns bearish or not. For that, as said, we would need to see a break back inside the range and some structure change. Then we can go with the idea of continuation inside this range. For the next reaction time areas, I marked out the daily cycle and the yearly fib time around September, if you remember from the chart. That would be the area to watch. That would also be the move toward the trend line from the all-time high, and around those dates we could see the breakout attempt. For now, however, we have the lunar timing today. BTC has so far made the low, but we still have the average and the yearly fib time in this first timing window. So in these first days, we would like to see the move lower if the low is going to form there. If that does not happen and price moves back inside the range, passing the first averages, then at that point, the range scenario becomes higher probability again. Then we trade it toward the highs and toward the average timing for the highs. Basically, we repeat the same process, trade the range. So I would say we should be ready for both scenarios. Scenario 1. If price comes lower, we have the next levels and averages there, together with one of the last higher time frame support levels, which is rising. Scenario 2. If price holds here and trades back inside the range, then I'm already positioned and can keep laddering into the position. Before going into the trades, here is the idea if this range holds. On ETH, it is a bit cleaner. This is what I would look for if it holds this range. A move back up, then back down, basically hitting the cycle time window, for example with an SFP of the low and then a breakout. For now, this is cleaner on ETH because it did not make new lows. If we take a look at BTC, then we have these scenarios. First scenario, price reacts here from the yearly fib time and the lunar timing. We see a nice push higher from here, then a rejection, and basically continue to range until the next cycle and time confluences. The other scenario would be price simply trading a smaller range and spending more time here locally. From there, it could form a higher low and some divergences. Keep in mind, BTC and ETH can also give us the reverse scenario. For example, ETH can form the higher low while BTC makes the lower low, like what we are seeing for now. So these are the ideas for now, and we will see how far they play out. The invalidation is really close. Basically another move lower, and price not being able to break back above the range. If that happens, then we have to look for new scenarios. Now we know that the monthly averages are a bit lower, so the move lower can happen if support does not hold. But all of this is only the chart and the idea. Maybe it becomes a high probability event, but it would still be useless if I do not trade it and do not call the trades. And with that, we come to the trades. We had a few trades during this move and overall inside this range. Not bad trades at all. Of course, not perfect, and not every trade is a win, but overall, a nice result over this sample size. All trades were called and shared. By the way, I still hold one short as well, but now we are looking at the active long trade. I took the long inside this range, and since then I'm not jumping in and out. I just hold the trade and manage it. It is always better to lose one trade than to lose multiple trades inside the chop. I had the first entry here, and then I waited either for higher levels or for lower levels where I decide if I get out or add to the trade. Price moved lower first, swept the low, and I had some order flow signals there, so I added to the position. Now the average is around here, and the target remains the same, 66K at least. As you can see, with the trades I take, I try to catch the bigger moves. Yes, sometimes there are fails, but overall the performance is nice because I do not really care if every scenario works out perfectly. What matters is whether I can execute the plan and share that process with the people. That is what counts, and that is what I will keep doing. So if you are watching this now, make sure to share it. Thanks in advance. Now back to the trade. For now, I added to the position, and I am watching if price is able to hold. The daily average to the downside would be another low or SFP. To the upside, continuation of this range is possible. Structure-wise, everything is still in a downtrend, but the 1 hour had a bullish break during the night. So for now, we would look for a higher low, or an SFP is allowed. Something to keep in mind, the 4-hour trend and the other higher time frames are still down. So yes, there is still work to do for the bulls. But I do not want to miss the trade. And if I am wrong, I keep the loss small. For now, I would allow an SFP of the lows. Around half of the position is filled, so technically I still have some room to add, or I can use that as a buffer and allow price to wick around here. Once we see a break above the last range high, which is also the 4-hour structure swing high, then I would aim for the local range high step by step. Maybe we also get a short if we get a bigger bounce, but that would already be a different setup. If you want to learn more about those setups and what we look for, you are welcome to join. With that said, overall, I still think this is the area for the bottom, based on the historical data and the tools. The only thing that does not match for now is the 80% drawdown, which this time does not really fit. But the levels are slowly but surely getting hit, so I go step by step. I am confident in my analysis and in my trades. That does not mean I am always right, but I know my system, and I show that by calling the trades. So I hope you enjoy it if you are following along or if you are learning from it. I wish you a nice day, and I will see you in the next one.